Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May 23rd, Tuesday. We are going to review first economic data real quick, and then we are going to perform really nice technical analysis. And let me tell you, I'm going to show you a really interesting trading that I took and the indicator that I had for a nice long off the bottom. But first, building permits as expected, minus 1.4. This is not really moving the market. PMI flash, though, remember that these readings, PMI, mean that above 50 is expansion and below 50 is contraction. So basically, this PMI flash for May, these are predictions for this month, calculations, prior estimates. And this looks really expanding services, expanding composite, but look at manufacturing. Manufacturing is showing contraction from 50 to 48. We were expecting 3 readings in the at least 50, but manufacturing is cooling down. That looks nice, right? In terms of Fed work. New home sales, though, look at this, 0.683. We were expecting 665 and 4.1% month over month in new home sales. This is not good because this shows you that basically home sector, new homes are being bought up and there's still spending. Consumers are still buying houses, and this is not good. This is one of the markets that are still to show signs of cooling down. Manufacturing index, services and manufacturing shipment still in the negative, and that's really interesting because that is aligned with the manufacturing PMI flash that we got in the contraction territory. Before moving on to the charts, let me show you the probabilities for the 25 basis points hike, 32%. We started 1 month ago with 23, 1 week ago with 22. Yesterday it was 56, but after new home sales, this is increasing to 32. Don't get me wrong, 67% is still betting for a pause, but the probabilities are going higher and higher as long as we get economic data that supports a new hike. That is going to be higher and higher, and that is not good because we are going to review also the interest rates for December, and bonds market are pricing in less and less a pause. So let's move to the chart and see the Nasdaq. So yesterday I was telling you that we were caught in these two ranges on the Nasdaq, 13,920 and 13,860. We were chopping out, waiting for a deal. During the overnight today, we got a spike up, and since then, markets don't like this, by the way. Since then, we've been selling off until the open. And in the open, we got on the 30-minute chart the same kind of support that we broke before the open here. So we broke down and we established this, you remember, on Friday, this pre-market, and then this open. But look at this. We are holding. We were in this range, and let me tell you, once this range was broken, oh boy, I took this short. There were a lot of buyers down here. Look at all these weeks. A lot of buyers. Once they start seeing the ground, they just panicked and panicked. I took this short, and then I took this long. Then something is happening right now. Let me check. Negotiators meeting on the debt limit has ended. So no deal today either, and markets don't like that. Looks like there will be no deal today. Well, markets don't like that. They were expecting a deal today. So let me show you this short. I don't have, it's just a technical breakdown, but let me show you one thing for this other long, because there were a lot of divergences around here for this move to happen. Divergences in the actual cumulative delta. If you don't know what cumulative delta is, this is my broker for the trading futures. Down here, you see that at this stage in which we broke down, we moved lower pretty heavily, and look at delta. It increased from 4,000 to 21,000. That means that all these sellers were met by buyers absorbing all these contracts. And actually, in the cumulative delta, you can see these bars going up. And at the same time that we were falling, if we just remove that part, look at all these pushes. All these pushes. So I just covered down here in this second one, and I took the long right here, 41.78. And I moved until 41.85. Really, really nice move. Just by having a look at the delta and the number of contracts being held by all absorption, I saw on the time and sales thousands, literally thousands of contracts being absorbed but all these move down. But look at this difference. In this move, we pass from 22,000 to 16,000. So contracts are going lower. So actually, these are active shorts hitting the bid like crazy. They are pushing. This is not the same as this fall. This fall was a technical breakdown, but was supported by a lot of players buying literally thousands of contracts. And look at this volume here. So these kind of things, I wanted to share with you guys these kind of things because sometimes you just see things like this, these nuances, these details can save your day and can provide you with a lot of opportunities. So let's go back to the trading view to go through other markets that I would like to review today. So no deal today. If you are short, congratulations. If you were long, I mean, I hope you manage your risk, but look at dollar. Dollar is actually pushing. Let me move this arrow. Is actually building momentum to the outside, to the upside. Is trying to follow the 200, and the 2-hour is just bouncing off the EMA the second time. Remember the Fibonacci retracement? This was a really nice higher high, higher lows. Really a nice trade, and I think dollar is going to continue strong until 105. Yields were in the green until recently. Yields just got demolished due to the fact that we don't have any debt limit deal today. So they are just crashing. They look quite bullish though, but treasuries are just feeling the bid. It was just a matter of time for them to really push up. These are interest rates futures for December 4.82. They were up 1% and they are more and more approaching current levels. 5.25% is our federal funds rate. So more and more bonds market are not pricing in this kind of interest rate cut that we got here and on the banking crisis down here. More and more they are adjusting, and maybe market is starting to really realize that there will be no cuts this year. It's as clear picture of that as that. Is there any risk on today? It was. It was. Look at this. Russell started the day trying to put a nice breakout because it's the one that didn't broke yet of the three indices, but it got actually rejected. It was rejected. We started going down and we are now feeling the pressure, and we're still in the green, but not yet. Bitcoin also trying to do that, trying to support right now 1.40%, but I mean, we started the same risk on. We are now holding, but with no deal in the horizon. Apple is minus 1% or minus 1.22, Microsoft minus 1.24. All these two, with these two being the red this deep, I think there's no hope for today's. But let me tell you, we were due for a pullback, and this is Microsoft, where we are approaching. We are approaching this ascending trend line. Apple, we are approaching the gap that we have still to fill. Let me change to the 2-hour. So this was, let me clear all this. This was the actual range that we broke out, and we are now in here. So we are just coming back to the range. So unless we continue lower and we start seeing 170s and 169s, try to fill this previous gap, the Nasdaq is also due for a pullback. And it's just a matter of time to see these kind of things. We are still trying to support. Look at this trend line. Look at this big push. This double top may be rejected once we cross this line, this level, but we are bouncing off that. 13,769. So even though we are quite almost in the red, 0.90, we were due for a pullback. We were just, after all this push, we held, we tried, we held, waiting for the negotiations, and then we just lost all hope after the news that came out saying that there will be no more negotiations, and negotiators are just done for the day. All hope is lost, but we are down here. Let's see how we go through the week. Tomorrow is FOMC minutes. There will be plenty of news yet. And one thing I would like to highlight is that energy crude oil is 1.73. I expect energy to push higher. Look at this ascending wedge, ascending triangle. I think Fibonacci retracement might be a good opportunity to go short again. I will be watching this level for shorts to recommit and to really push back down oil. If not, I think we might see 80s or something like that. What else? Banks are in a mixed state, but look at this. Staples are in the red. Healthcare are deep in the red, and utilities are flat. Defensives are in the red. And at the same time, technology is quite deep in the red. And the other sectors are also too. The only sector that is actually going higher is energy. So there's a lot of bad, a lot of fear, a lot of uncertainty. I mean, these markets are really tricky because we are waiting for things to develop. And if we don't see progress, markets just explode. And this is what is happening. We are just seeing choppy after choppy day. And if we don't see progress, we just sell off and we just don't hold. But be patient, because when things actually happen, when we get good news, I think on the debt ceiling, debt limit increase, debt ceiling, I think This is going to provide us with better opportunities. Until then, you just have to manage your risk. Maybe don't even trade. Look at this volatility. VIX was up 5%. Right now is 4%. So volatility is coming. And I think better days will come for sure. Tomorrow there will be more opportunities, and this waiting game is just not good for the traders. So yes, yeah, let me shut that up. Okay, so I think that's all for me. I hope you had a good trading day. These days are not easy. So if you're in the red, don't be frustrated. Just be more patient tomorrow and wait for better opportunities. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates like this one, and market recaps. Thank you for your time and for your support. I hope you are being patient and disciplined, because remember that those are key skills for us day traders. Discipline and risk management are key for your success. You will learn that with experience. Until tomorrow, I think FOMC minutes tomorrow will provide you with better opportunities, and maybe we got a deal on the debt ceiling increase. So until then, stay safe everyone, and see you tomorrow.